And good morning and welcome to the VSA Capital 5-Minute Morning Miner. It's Friday the 17th of December. We are so close to Christmas, and I think we'll make this the last 5-Minute Morning Miner podcast until next year because...
Oh, dear. Oh, dear.
Well, we could do them next week, but I think the news is starting to dry up. Why don't we give everyone a break, Paul?
Okay.
And actually, I'm still hoping in the first week of January to be in Vancouver seeing a lot of mining companies. So you'll probably have to do it with Ollie in the first week, although maybe I can somehow send you a message back from what I hear from Vancouver, assuming I get out there.
Yeah, okay.
Anyway, let's run through a few things today, and then we'll just have a bit of a discussion about maybe what we see for next year, because that's always interests people. But I think we should start actually with a Shanghai Mining Club client of ours, Longcore, which actually we're a little bit behind because it was actually late Wednesday, but they announced some results that were pretty impressive, weren't they, Paul?
It was preliminary economic assessment for their Adumbi gold deposit, which they hold about 85% of in the DRC. Using a $1,760 US gold price, post-tax NPV at 879 million. Average annual production of 303,000 ounces of gold a year for a 10-year mine life. Total cash cost at $852 per ounce and all-in sustaining cost at $950 an ounce. Now, those numbers are around a hybrid energy case for the mine, which would incorporate renewables as well as fossil fuels. If they went with just fossil fuel diesel energy only, it would be about 20% less on the capex to 400 million, whereas the hybrid project does require additional front-end capex for a total of 530 million.
But it's all pretty good news, isn't it?
Yeah, the post-tax, all these numbers indicate the IRRs in the middle of the 20s range here, so that definitely something to mine here. And being over 300,000 ounces a year, it's in the big category.
There you go, one to watch for, Longcore. Very good, Paul. Anything else, any other news this morning you want to talk about, or should we have a little chat about next year?
Well, I'll talk first about Johnson Matthey. As they had announced a couple of weeks ago that they were exiting some portions of their business around the green agenda, and here's one of those things now. At this point, they've sold off their health subsidiary because it's involved primarily in the pharmaceutical space as opposed to other parts of catalysts and that sort of thing. They felt it was non-core to the business, and they've sold it essentially to a private equity group here, and that coming out at $325 million or million sterling is at enterprise value for which they're selling it there.
Paul, you'll be on our tech and transitional energy podcast next if you carry on like that. Anything else or today?
Also, the Jervois Global, who is a past client of ours, they gave us an update on construction progress on Idaho cobalt operations. They've revised the capex up by about 7.5% to just shy of $93 million US for the construction, that based on some of the changes in inflationary costs in the United States. But they are still on schedule for first ores in August of next year and commercial production by the end of the year.
There you go. All right, let's look ahead, Paul. What do you see in your crystal ball?
2022. I see pretty strong markets on the battery materials and anything going into the green agenda here. We saw just yesterday the first interest rate rise by a major government with the UK putting in 15 basis points rise. We'll see more of that next year as nations try to get control of inflationary cost pressures, which are proving to be more sticky than what economists had been predicting in the third quarter. So as a result, it's the battery materials and the green economy type materials which will be strongly priced, I think.
The only issue with that, Paul, is I mean, a lot of them had a really good 2021. I mean, lithium went bananas, and certain lithium stocks did. I mean, and we act for some of them, like American Lithium went through the roof, and so actually, I think they probably had their run, certainly in lithium. I wouldn't be chasing those stocks personally, but I think we do have three. So we've had some house stocks that have been phenomenal this year. We do have three that we act for that I think will actually have a good year in 2022. The first is Tungsten West. We obviously IPO'd that back in October. IPO'd it at 60p. It's currently trading about 66p, so that's fine. It's still at a premium. It's been a pretty rocky last couple of months in the market for juniors, so still be a premium is good. But I think as they start to go into production at the end of next year, that share price will double quite easy, I think, in 2022. So that's one of my tips. One of my second tip with the house stock is ferroalloys, where obviously we know Simic Davis and Vision Blue came in. And last year it was all pretty exciting, and the stock went from sort of 8p to 45p, and it's just drifted back because these things take a long time. Mines are not built overnight. A lot of people don't understand that, and it's drifted back to about sort of low 20s. Actually, it's really disappointing. But again, I think as 2022 goes on and news comes out, we know that Vision Blue has options. I think it's at 78p. So if you're looking at a price move from sort of 22, 23p to 78p, which could happen again, you could triple your money in ferroalloys next year quite easily. And finally, one which I don't deny the fact that it's a house stock. I also have personally quite a big position, but Tectonic Gold. We know it shot up to about 2.5p at the back end of 2019. It's drifted back this year to 1.3p or so, but we know that there's likely to be next year corporate activity. The management are totally aligned with shareholders. They're just looking for shareholder value. There's no egos here whatsoever, and I think that we have a target price of 5p there. So again, you can triple your money in Tectonic Gold. So there's three hot tips for 2022. Paul, do you disagree with any of that, or do you want to add any more to it?
I can add a little bit more actually here. I think the rare earth mineral space looks pretty good too, and you want to have a look at the Shanghai Mining Club participants for sure, because we had three of them in the rare earth space that should do very well for next year. What's that?
Name them, Paul. Come on, let's name and tell everyone what these fantastic companies are.
We've got Macango, we've got Ionic Rare Earths, we've got Pensana.
Yeah, Pensana actually didn't do Shanghai Mining Club this year. I knew you were going to say that one. But obviously Pensana are very focused on actually being involved purely with the West, building their process plant up in the north east of England. Obviously, they're in Angola. So, but Macango and Iconic Rare Earths, you're absolutely correct. Again, I think Pensana's drifted back a long way during 2021, and so will almost certainly have a good run in 22. So I'd agree with that. Iconic Rare Earths looks really, really interesting. Love Macango. It had a very, very good 2022. So maybe it'll have, 2021. So maybe it'll have a quieter 2022. But it is a good stock, and it's one you can just sit with and hold on to.
Yep. And then two more for me, also from Shanghai Mining Club, I would say. First of all, the spin out from Iron Ridge, that's now Atlantic Lithium. That's going to be a good performer. There's a lot more upside in that Awoya deposit than people realize, and we'll get a picture of that better as we go into through 2022. And the other one, Apollo Silver, which is TSX listed, but they will be posting the compliant newest estimate there on their Waterloo project down in San Bernardino, California. It's silver, open pit silver.
I agree with both of those, Paul. I think they're good mentions. I did say I thought lithium had gone far enough, but Atlantic Lithium actually has not moved up alongside the other big lithium plays, particularly on the TSX. So I don't disagree with that. I think the whole West African situation in Ghana and Mali combined, there is activity to be done there. So yeah, another good tip there, Paul.
Okay.
All right. Well, there you go. There are some good ideas for everybody. Anything else, Paul?
No, that'll do it for me.
In which case, I hope I'll obviously be seeing you later on, Paul. But I hope all the listeners enjoy your Christmas. Do feel free to let us know what you think of the Morning Miner. I've recently had some really good comments from people who've been listening, which I really appreciate. And if you've got ideas or stocks you'd like us to talk to, if you're a company listening to this and you want us to talk about you, well, get in touch. And who knows, we may well talk about you too. And I wish everybody a very good Christmas, a very safe Christmas. Don't go and get COVID or Omicron or whatever, and have a wonderful 2022. And to say, fingers crossed, I'll get to Vancouver the first week of 2022, and we'll be seeing a lot of these mining companies out there.